Good afternoon, everyone. It's Brian Caprice from Keep Trading Simple, and welcome to this week's Nadex Weekly Charts and Analysis. It is October 19th, 2021. Whew, October is half over. See what happens? You have a baby in 19 days, like disappears, and you're like, whoa, what just happened? No, baby's not 19. He's only 11 days old, but any parents out there knows how that first week goes. But we survived, and we're here, and I would like to say we're thriving. Yeah, my daughter has a new best friend. She loves it, sings Twinkle, 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 Little Star every day. It's awesome. Anyway, markets have been pretty cool this morning. So we're going to dive right into things and kind of set the week up for you guys. For those of you that are have been following for a while, really the last couple of weeks, there's been some really cool kind of I'm going to call them sub strategies. I've been making up a lot of the mentoring appointments that I needed to kind of bounce on with the baby, and we've been giving out strategies left and right. Just different. Everybody's strategy is different, and I've been helping tweak a couple of them. And some of the ones we keep going back to for like kind of recommendations for people, like, listen, you should try this. I think this will give you a strategy that something that you can work with to find your own trades. Been so many different setups. It's been kind of cool for nighttime people, daytime people. So again, take a lot of notes during these sessions. It's really what my plan is, that you guys can, get at least a golden nugget from every single one of these sessions today. So, or that we've been doing. So, with that said, let's just dive right into things. For those of you that are here, you guys know, obviously, I need to get a new picture. There's a new little one in the way. The girl has hair down to her butt. She's twice as tall. The boy on the right in that picture, he's as tall as Melissa. Asher's hair is, past his shoulders. I obviously have a beard. I didn't have one for a little while. My daughter joked that, "Daddy, your white is back," and she means my beard. Still dark up top, but man, my beard is basically all white. You guys have seen it, but it's she's picking on me, telling me that, "Daddy, your white is back." She was very upset when I cut the beard off. But for those of you that are new out here, welcome. Just to give you guys a quick kind of 30-second rundown, I've been in the market since about 1999. It's when I first really got interested in placed my first trade. I did all the wrong things in the beginning, like many people out there do. I remember it was actually something I got my dad to buy because he had a brokerage account. I got him to buy, I believe it was called like Pink Elephant. It was like a motor. It was like nothing like what you would think. It was like it was like a pop-up like motorcycle company or something like that. But when I heard about it, it was already too late. So it obviously went down after we bought it. But it was my first official trade. But I've been doing this. I learned traditional stocks and options to start off with. And I did that for a couple of years. Found currencies about 5-6 years in. I absolutely love currencies. Love the idea of leverage. That was the biggest problem trading stock when I was younger, was just didn't have the capital. I had the time. I had all the ambition. I just didn't have the money. And then when I learned how, options with leverage, and then I saw Forex, and I was like, this leverage is even better. This is great. Really kind of went full blown into the currency markets. A couple years later, learned how to trade futures. I became a financial advisor. I worked for one of the big three banks. Got the really kind of a great education on bonds, but realized very, very fast that financial advisor did not mean what I thought it meant. When people that were much more tenured than me, 25 years, a gentleman that had I think it was ridiculous. It was like he had like the ninth most assets under management at the firm, in the entire company. And it's one of the big three. So it's a big one as a single advisor. I was asking him to analyze charts for him. I was like, what? So I was really surprised by that they're just not really taught how to trade. So I knew that trading and looking at charts and analysis and helping people was really my mission, and left that realm, went out and taught. I traveled for about 6 years. I used to work in New York City. I used to walk past the New York Stock Exchange every morning. Would see the bulls right outside my office. So, definitely been down there, heard the stories from the floor traders, and actually helped train a couple of floor traders that were like, yeah, what we were taught doesn't work anymore. Help us. So kind of a cool kind of experience. And, like I said, my mission for every single one of these sessions, you guys will look at something a different way, go and research something differently after this, or, again, maybe even just give you the confidence that, your strategy matched up with my strategy. Speaking of strategies, my strategy is obviously a little different than most people out there. I'm a price action based trader. I'm not going to throw 12 different indicators up on the screen and then, give you the secret sauce by throwing another 12 more on there. As busy as my charts get, it's a bunch of squares and rectangles and occasional triangle and a lightning bolt. That's about it. It's kind of like trading with crayons. I joke, right? I keep things simple. I read candles. I look at areas of supply and demand. And occasionally I'll throw a fib. Fibonacci retracement out there for you guys, because I know how much you guys love fibs. Actually, some of the easiest strategies that I've been giving out, because you guys know, number one, first and foremost, risk is the most important thing when you're trading. One of the nice things about fibs is it kind of already, gives you kind of profit targets and stop loss areas naturally inside of the tool. It's not my first go-to, but I will throw it on there as confirmation. But I know people love it. There's like, we talk Fibonacci and like the stars twinkle and everything like that. It's like, ooh, Fibonacci, right? So I'll throw it on there occasionally. You guys will see it. I think I have it on 2 or 3 of the charts right now. People that are new to technical analysis absolutely love it. So yeah, we'll do it. With that said, let's jump into today's content. Before I start, because I'm talking about risk and charts and things like that, we obviously have to go over this risk disclaimer from Nadex. You guys have heard it before, but if not, just make sure that everybody understands that trading on Nadex involves risk and may not be appropriate for all. Members risk losing the cost at another transaction, including fees. Now, you should carefully consider whether trading on Nadex is appropriate in light of your investment experience and financial resources. Any trading decisions you make are solely your responsibility and at your own risk. You guys have heard this one once or twice before. Past performance is not necessarily indicative of future results. None of the material presented herein is to be construed as a solicitation, a recommendation, or offer to buy or sell any financial instrument on Nadex or elsewhere. Nadex is subject to U.S. regulatory oversight by the CFTC, and Nadex is a registered trademark of the IG Group. All right, now that all that is out, let's cover our agenda for today. So first things first, we're going to cover the upcoming news events for the week. I actually just had an amazing mentor session a little while ago, and we talked about news and why I like news so much. For those of you that are new, the nicest thing about news trading is I know that it's going to provide a catalyst for the market. It's nice to know when the catalyst is hitting the market. There's nothing worse than being a trader, scheduling your entire day around when you're going to trade. You go to trade and then you spend 2 hours looking for a trade setup and you can't find a single one. It's easy to find them in the past, but you can't find it. And it's because there was obviously no catalyst during that time. This is why I like news trading. I can literally look weeks in advance and figure out when there's going to be high potential catalysts in the market that are going to move it. Why waste time sitting there for hours and hours and hours when I know when a majority of the movement is going to happen? If you like doing things the hard way, don't look at an economic news calendar, but I'm going to look at one to help you guys out to try to find as much opportunities and shorten your time in front of the screen. I was at the eye doctor yesterday, and he's like, wow, he's like, for your job, he's like, your eyes are in remarkably good shape. And I was like, really? I was like, I thought my vision was going. He's like, no, you're still good. You don't need glasses yet. And I was pretty excited. So again, chart time is a real thing. Even my doctor said, was surprised. And he's like, huh. And then he got all excited. He's like, wait, you know how to trade? It's funny how that, you guys, it's amazing how every doctor somehow, once they find out what I do, rolls into, well, what are you looking at? What do you think about this one? I'm like, man, yeah, happens all the time. Anyway, after that, what we're going to do is we'll dive into indices, look to see what they look like. I will say right now, if you guys are not trading the indices at the open, you're missing out. The last 2 weeks, today, again, I think it was 3 out of 4 again. That's 2 days in a row. Last week, again, new baby, 11 days old. Last week, I don't remember how many days there were in the week, but almost every single day when we did the analysis, it was popping up again and again and again and again and again. If you guys are looking for a strategy with these short duration contracts, absolutely, without a doubt, drop down and look at those indices, right? I'll go over the strategy again today. Almost every single day, they're hitting 3, at least 2, but most times 3 out of 4 are hitting right at the open, like clockwork, right? Doesn't mean it's going to happen tomorrow, because again, past performance, you guys know that what that says, but for 2 weeks, it's been hitting almost every single day. So please get out there, go try these things out. And then we'll cover Forex. A lot going on in the Forex market. I'd say the craziness has been the dollar and the pound are really the two that have been nuts. Dollar today weak, pound crazy. Yesterday pound was strong. Last week pound was weak. Euro's going all over the place. New Zealand's raising interest rates. Canada is now talking about raising interest rates. Australia is probably pretty close behind too. So a lot of opportunity. If you don't like opportunity, you guys can skip that section, but there's so much opportunity over there. And if you've ever heard me speak before, a chart is a chart is a chart. I don't care that I don't care how good of a trader they are. Like, no, I don't like the Forex market. Really? Because it's no different. A chart of the ES is the same, right? They're all charts, guys. They're all done the exact same way. If you know how to trade one, you know how to trade all of them. Anybody that tells you that they can't, it's only this thing, doesn't have a good strategy. It's my opinion on it. It is what it is. Last but not least, we'll cover commodities. Gold, silver, And again, if you watched our silver discussion earlier this morning, what direction did we tell you silver was going to go in? It went in that direction. And then we'll cover oil, and then if we have time, natural gas. Always love when natural gas is down and in the red. I still have not filled up the tank. I haven't checked the percentage this week. I probably should, but I did get my warning email. They're like, hey, we haven't heard from you. We're kind of getting worried. I don't know if it's we're worried that you went to somebody else, or worried that I'm going to run out of gas type thing. If it's true concern, or if they're just afraid that their competitor got me. It's kind of more like I'm not spending 650. I'll wait till it gets back down lower, because it should have turned and it did. So we'll see how that saga continues to move. But that's commodities. All right. So with that, let's jump across. If you guys do have questions, comments, anything like that, all you have to do is just I guess you can type in a chat or just do questions. I know questions I typically have up on the side. Just answer questions. That's the easiest way to get in touch with me. If I say something and you need clarification, if not, I'll give you my email address at the end. You can always email me as well, and I'll do my best. Like I said, I'm still digging out from taking about a week off with the baby. But like I said, easiest way is just inside of chat. With that, let's go across and go into the news. So here is the news. Hold on. I got a window that just popped up. Let me put it over here. I'm telling you, multiple monitors is it's a blessing and a curse. If you guys have ever heard that before, it's a blessing and a curse all at the same time. I have multiple monitors, but then something pops up and I move something and I got to find out where it's gone. Anyway, to start off with today was not really an action-packed day as far as news goes. Bailey spoke earlier, and obviously, as I said, the pound has been moving pretty much in regards to them raising interest rates. They've been very clear they are raising them, and kind of what the schedule has been. So a lot of it is already baked in. It's not like a surprise that they're going to do it, and everybody's going to start doing it. It's just the pound has been very, very clear about it. So it's kind of baked in, but traders are liking it, giving us some pound strength. So you can see that right now in the last 24 hours, the pound dollar up 73, pound yen up 86. Those are the two big ones on the market. You can see overall there's a little bit of, and I gotta say a little bit of weakness in the dollar. Euro dollar up 19 pips in 24 hours is not really that much, right? Dollar Swiss down 2, dollar yen up 2 in 24 hours, not a lot, right? Dollar CAD -6, not a lot. Aussie, whoa, what happened here? Well, Aussie had news last night, okay, which helped the Aussie. And then obviously Euro pound is showing us that pound strength out there. So today we have a speech from Bowman at 1:15. Not necessarily the biggest mover, and it's kind of an odd speech. Talking about diversity and economic recovery at an online conference. Not really. Again, not really necessarily the biggest market movers. And again, personally, I couldn't tell you any of these other, anything that Michelle Brown has written before or Bowman has written in the past. Shows that it's a voting member, which again, but again, this is a very, very broad topic. Waller speaking later on today, again, talking about economic outlooks. Being a voting member, talking about your outlook matters a little bit because it kind of shows you what he's thinking as far as where his vote's going to go. And again, what they're voting for is the speed of taper and when they're raising interest rates. Okay. Interest rates basically is because of inflation. Things are getting out of hand. And now Jamie Dimon made comments a couple of weeks ago, which I thought were spot on about how their hand was going to be forced. And now we're actually hearing people talk about hyperinflation. Okay. So I'm telling you, Jamie Dimon is one of those guys. Don't sleep on him. He knows some things, right? He knows some things. Very, very smart gentleman. Then we dive into tomorrow. So tomorrow, we start off early morning with a gauge of CPI, gauge of inflation for the pound. And as I said, they already said what they're raising interest rates. They're kind of giving us the schedule for it. Year over year of a 3.2. And again, if you don't know anything about interest rates, understand that pretty much the mandate for everybody is between 2 and 2.5. It's basically around 2 is what they're looking for. Different countries have different mandates. 3.2 is obviously higher, right? And you could say, well, last year, we had COVID. Yeah, we did. We had COVID last year, but again, this is higher than what we would like, and goods and services are not getting cheaper. And all we talk about now is what's going to happen at Christmas, right? Everybody's like, we're not going to be able to get toys, right? We're not going to have things at Christmas, right? Because of supply chain shortages, right? So again, you guys know how that works. If you guys are any parents out there ever tried to buy the toy of the year, right? It's impossible, right? Kind of like, and for adults, it's just not toys, right? Adults, right? Anybody out there that's tried to buy a video card in the last year, right? Basically, the only way you got one is if you won something on like a new egg shuffle, right? It was impossible, right? Again, the crypto people were buying them, and again, there was some hokey, questionable deals. I'm going to say deals because magically, you can't get one, but yet a crypto farm has 49 of the same exact card directly from, they managed to acquire 49 of the exact same card. They only could have bought it in a bulk shipment directly from the producer. So it's kind of like, right? A little sketchy, but you know what I'm talking about. It's impossible to get some things. So that's where this hyperinflation is coming from. So seeing CPI for both the pound as well as for the Canadian economy. Interesting, though, that the forecast is only 0.1. I think the dollar CAD will be something to watch tomorrow morning because the common, medium, and trimmed, again, you don't have to know what these are year over year. But some of these year over year numbers are quite large, 2.6, 3.3, even the 1.9 is not bad. But this is a month over month number, okay? I wouldn't be surprised if this comes in at a 0.2 or 0.3 based off of other countries that we've seen. That would bring enormous amounts of strength right into the CAD. Dollar CAD would be red tomorrow. So could be a cool setup. 10:30 tomorrow morning, oil inventory. And check this out. Surplus of 2.1. But wait a second. Oil's at $85. We don't have enough oil. I don't know. The exact opposite is what we're seeing, right? 2 weeks in a row. Actually, is it 2? No, 3 weeks in a row now, right? Surplus. Huge surplus. And this week projected to be a surplus again. But yet, gas prices, oil prices, 85. Why? Right? Why? There's some shortage, right? I mean, we got more and more every week. We got more and more sitting in that surplus. So yeah, just shows you that again, a lot of times the data doesn't necessarily match. Well, don't forget API data will come out today on inventories. Give us kind of a foreshadowing of what we could potentially see tomorrow morning. That'll be out later on today. But again, 10:30 tomorrow morning, nice little oil trade setup. Thursday, we have the Philly Fed Manufacturing Index, as well as unemployment claims. Last week, we were under 300,000 by 293. This week is projected at 298. And again, I think that's them being a bit more conservative. They're like, no, we don't want to go too far, right? So they brought it back up a little bit. But we're back to kind of pre-pandemic levels, right? The last time we saw numbers like this was February of last year, really before everything went crazy. Yeah. So it's kind of, or 2 years ago. Sorry, not last year, 2 years ago. We're back to pre-pandemic levels. So again, we'll see that if we can get. I wouldn't be surprised if this comes in at 290 or like a 286. We'll see. And then while we're speaking, and then 3 p.m. tomorrow, we basically have the equivalent of Powell, right? The head honcho speaking in Australia. And again, it's inside of decent trading hours. You don't have to trade that one in the middle of the night, which is always nice for Australia. So you got to love that. Friday, look at this. The whole screen just blew up. So Friday starts us off with retail sales. Now, retail sales is expected to be a nice positive number, right? Last time for the pound, it was lower, right? It was a minus number, but now it's expected to be good. We're talking about interest rates. Could be a nice little play there for the European session, but then all of a sudden we have all these PMI numbers coming in manufacturing services. The good thing is none of these is really necessarily close to 50. So none of them show an economic contraction. They all show an economic expansion. That's good. That can bring some strength. And again, that could give us a nice little Friday. And then we crack in with core retail sales and retail sales numbers with the CAD. Again, both were negative last time, both expected to be very nicely positive. Again, also something to bring some CAD strength in there. And then we have the US-based numbers. And again, they're basically supposed to be on par with where they were, a little bit less on the manufacturing side. And then we have this Treasury currency report. Now, Treasury currency reports are weird. It only comes out twice a year. Not many people really follow it or know much about it. It breaks it down why traders care. It provides a detailed review of global exchange rate policies, economic conditions, central bank and government actions taken around the world. Most importantly, outlines countries that the Treasury deems currency manipulators. All right. The $1 million question. What is it going to say? What country is going to be on the top of that list as far as currency manipulators? Pretty sure everybody in this channel would guess the right answer. Starts with a C, ends with an A. Last 2 presidencies in a row have both said the same thing. Yeah. So I'm pretty sure you know what it's going to say. right, ahead of time. I think what will really be a bigger change is when we do have countries starting to go the digital route. You will start seeing more action over on this with this Treasury currency report. I still believe that China will be the first one with an official. And there's a couple other countries testing it that'll be out there as well. Interesting comments made yesterday as far as this goes. So I don't think that cryptos are included in this yet. I think this is only like the countries standardized currencies. I don't think they're counting things like Bitcoin yet. I will say there were some interesting comments yesterday by Carl Icahn. If you guys know who he is, he knows some things too. Kind of one of those big money players out there. He made some choice comments that he is not ready to get involved with Bitcoin, nor does he see any reason that anybody else really should, for the simple fact that the United States could do exactly what China just did and basically could send it to zero. And again, it's going to come back to controlling currency and things like that. And you can say we don't want control, but when it's illegal to accept it, it can cease to exist in one sentence. And he just said it's not worth the risk for my money. So kind of an interesting play, and again, don't think it's included in these reports yet, but once things start going digital, these reports will be a little bit more, something to watch out for. But that's how we're going to end out Friday. So big question is, can we get a feel good Friday this week? It's always nice. The market loves it. People love it, but there's no guarantees in the market, as you guys definitely know. Okay. All right, let's go into the charts, and we will start off with the indices. I always like to do kind of a trade of the week for this one. I wouldn't say that there's anything really for the rest of the week that really stands out. Probably Friday. I was trying to think of what really would be probably the best one. Probably this CPI number. It could be the pound. I mean, it could be this one again. It's a hard release to trade, especially on the East Coast because it's at 3:00 in the morning. But probably pretty decent. Unfortunately, really this 8:31 on Monday was really the trade of the week for me. Yeah, that's probably the best. Next Monday we have the business climate. Here's a foreshadow. Next week, this is going to be the trade of the week. Next Tuesday night. But for this week, I don't know. They're all okay. But I wouldn't say any of them are like AAA positive. You got to get it. It's nothing like that for the rest of the week. Yeah, as we come probably. All right, so let's go across. Let's start with the yes, right? S&P 500. So we're green right now. Not surprised. Again, one of the things that we've talked about recently is, and again, this is something I got from my traditional options background. For me, taking things that I've used that have worked in the past, I always like to incorporate them in. And one of the things that I learned back then was about the VIX. Now you can trade this with traditional options. It's not something you're trading at Nadex, but it's a gauge of volatility. And when it's red, markets are up. When it's green, when it's getting higher, when volatility is getting, crazy, the markets tend to go down, right? And again, it's because the anxiety and fear level when the markets are going down is much, much higher, right? Nobody's nervous when the markets are going up, right? Well, I guess short sellers, but for the most part, pretty much most people are happy, right? It's low fear. So the VIX always gives us a gauge. You can see kind of where the VIX has been kind of gauging itself back and forth lately. But being red, we expected green today, and that's exactly what we got. Now, we always talk about pullbacks. In our session this morning, we did talk about pullbacks. And, here is the open right here. Now, this is the strategy. Again, if you guys are not, guys and girls are not trading this, it's so easy. Just look at it every morning. There's the open today, right? Right here where this black candle is. We talked about a pullback. We knew that 4,500 was going to be a psychological level, right? It's got a 5 in it and double zero. So it's a big, big target that, the price is hitting. And it did. It came up, it broke it. All the support and resistance traders in the world all went long instantaneously. Like, woohoo, we broke 4,500. Go long, right? And immediately they all got stopped out again as it came back through the other side. And we were looking for an area of buyers. Well, it just missed it. There's a small level there. I wouldn't have picked it. You could have gotten it if you really wanted to. It missed it by a little bit. I'm going to share this with you guys. Again, the lovely woman that I just did the mentoring session with, and I told her, like, listen, one of the biggest mistakes that traders can make is chasing trades. It happens every single day. Something gets close. It gets front run. Buyers or sellers step in right before I was able to get in. just don't even bother. Don't let it bother you. It's going to happen. It happens all the time. It means your analysis was right, but just people beat you to it, and which is okay. The worst thing you want to do though is wait till something skyrockets and then try to buy it, right? Because as these people are all getting out for profit, you're the one saving them. You don't want to do that, and that's where those reversals happen. So I would have liked to say that, hey, listen, this was a great one. Unfortunately, it left without us. We missed it. No harm, no foul, no trade. Not a big deal. So 4,500 is obviously going to be a big one. The next one is going to be obviously up at the 4,550, and I'll put it up here, but I mean, it looks like it's so far away. It's right there. Let's change that to black. Make it so you can see a little bit better right there, so it stands out a little bit more. Remember also, and again, here's that kind of strategy for the people wondering. What we want to do is we want to drop down to a 15-minute time frame. Okay, for the U.S. Open, for these four indices, right? ES, NQ, YM, RTY, right, Russell? We want to make sure that we're on the 15-minute chart. We want to get a good read, right? Good read of what's going on. Now, yeah, you could say there's a basing, Brian. Why don't you get in? Didn't really have the most explosive punch off of it. I like kind of this drop in base here. And because of that, because I went a little bit more conservative, I missed. But you can see it went right back up again. We're kind of basing up top. I think later on, I think with everything we've seen this week, I mean, unless any of these speakers drops a bomb, that they're going to go super hard with go like 5. What is it called? I forget what it's called. When people are just, instead of doing the energy drink with water, they're just taking like things of it. It's like a triple scoop of energy drink, right? Unless they say they're going, super crazy, or they're not going to raise interest rates till 2024. This should be a grind up, and I think by the end of this week, I think we have the ability to hit 45.50. It's up there again. It's the ATR on this one on a daily basis. Let's bring it at the end. Is about 60 points. It is looking like what it is right now on the daily. With where price currently is right now, right? We're at I said it was what, 60? We're at 45.07. 60 points puts us up over here. So it's one of those things, am I calling a shot? This is the bottom right now? No, but with all the data, all the forecasts, all the earnings, I mean, the earnings have just been absolutely great, right? I mean, it's really hard to say, like, why wouldn't it? That's going to be the next big target for the week. And I mean, the big question is, I mean, really, with the way everything's rolling, I mean, if it's 60 points, can we cover 100 points by the end of the week? I mean, the answer is maybe, right? I mean, the conditions are there, right? The only thing right now that's going to stop it is the T word, right? Taper, and how quick they're going to put it in. But there's not a lot of reports this week, so as I would say, the trade's already happened for the morning. This one left us, unfortunately. We didn't get into it. I had you attend in the morning session today, our 8:45 morning market movers. We talked about catching a pullback, taking these long, and again, it came down, missed our zone, went a little bit higher. Now, NQ, you can see, came back and touched it. And what did NQ do? NQ came back. You can see right there, 9:15 is when we hit. This one was a dotted line trade, meaning it was a big area of interest, right? 15,300 00. Great way to trade that one. We had the base in here and the nice little pop. Again, telltale demand zone. It came down literally in the overnight from 7:30, not really the overnight, but 7:30. It positioned itself. It came up here as your opening candle, came down, touched it, popped all the way up, and you were out of this trade by 10:45. So again, a short duration contract. We've mentioned it numerous times. 9 to 11 a.m. Let's see. I'll block this off for you. Here's the low at 9, right there. And there is your 11. There's your short duration contract on the 2-hour. Came down, touched your zone right at the open. And again, closed well above that 1 to 3 risk to reward ratio. So again, you guys can find the strike prices for it, but that's just an example of what we've been talking about and how great of a trade setup it has been. This week, obviously, 15,400, I think, is well within reach. I mean, we could hit it today in the next few hours. One thing I do think we need to watch out for, and I have these zones up top, we do have sellers coming in, or they've come in the past at 15,529 and 15,557. So that could be a later in the week thing. I think right now, I think we can stay green. I think the NQ has been a little bit more sensitive, especially to the downside when any type of bad news has kind of come in. So just keep that on your radar. Like I said, I think 15,400. Watch that one. Look for some basing there. Look for a potential punch higher. But the way to play it is going to be to drop down to a 15-minute time frame tomorrow morning. Look for an area of basing in the overnight. And again, it can be up or down. It doesn't really matter either way. That's just what I'm looking for. And again, the setup this morning, great NQ setup. YM also had something similar. And you can see I'll do the same exact thing here as well. Let me see. Let's mark off 9 o'clock. 9 o'clock is right there. Let's move it to there. And we'll move it across to 11. This one peaked just shy of it. So you can see this one was like a 1 to 6, right? And what did it do? Price drove all the way down at, and actually this one hit at 9:45. So it closed low, came down and grabbed that zone and then survived. I'll move the orange out so you can see it. But that's what it looked like. Again, short duration contract, drove down, area of supply, 15-minute chart, same exact setup. This one, I would say also watch out for the 35,500. We are kind of sitting between the two. Again, 35,000 was the number yesterday that hit. Kind of came down and bounced off of it. We talked about it before. Being in the middle, yeah, there's a 35,250. But again, we're starting to kind of do a 25 and a single zero, but there's a 5 in it. It's getting a little bit more difficult in there. The 35,500 and the 35,000 flat are going to be the two areas to watch out for. So, right now, keep these two, up here and keep this lower one on your radar. Would not be using this one as another long. Again, 15-minute time frame in the overnight. Look to see where it is off the open short duration contract as well. You can see how big of an area it bursts through. Russell, same thing yet again. Now, Russell's was a little bit different. Now, Russell's, there was a little zone here at 430. Russell was all the way up here and continued to slice through and just kind of grab this level here, bounced, and then continue to punch. Now, Russell needed a little bit more of a hiccup. And remember, this is the one that's going to be, I forget what his name is, but there was that movie called Over the Hedge where they gave the squirrel, I think it was a squirrel or raccoon, I don't remember what it was, but he was like really, really hyper. That's like the Russell. And like this is like when they give him the energy drink and he can walk faster than the laser from that movie. Kind of the same idea. The Russell is always going to be the most sporadic. So it's not a trade. It's not a position for everybody. And this is a great example. Okay. Had you set a trade in here and you set something up like this saying, yeah, I like that zone. It came down and it took a little bit of a bounce. Oh no, I got stopped out. Well, guess what? There was another area of buyers right below. This is why we always set things for a 1 to 3 risk to reward ratio trade. Guess what? You took a loss. You had a no entry, a +3, a +3, a -1. So we're +5. And then guess what? There's your 1 to 3 again. You're a +8 on the morning. Yeah, see how that works out? So again, same strategy. One of them got stopped out. One was a no entry. 2 were immediate. And 1, the second entry down here, again, a gap level. Very, very easy to draw for everybody out there. Even if you don't understand it, you should have been able to draw this one. Nice punch higher. And now we have that profit taking coming in at noon as it's starting to roll back over. Again, boom, boom, boom. 3 trades. Actually, I guess 4 trades. 3 for 4 in the morning, 1 no entry. And again, great way to trade setup. 15-minute time frames on the indices, short duration at 9 to 11 contracts. Okay. No, that's a different one, Sean. Ice Age also has a squirrel, but he's chasing a Ice Age. In chat, guys, somebody said Ice Age is the movie you're looking for. No, Ice Age, there is a squirrel who's chasing a raccoon or chasing an acorn. Over the Hedge is a different movie. It has Bruce Willis as one of the voiceovers in it. And I forget what his name is. It's like Zippy or something like that. But at the end, they're in like a dire scenario and they give him an energy drink. And all of a sudden he can see sound, right? He saves them by doing that. He's like, yeah, it's crazy. Watch it. It's a really, really cute movie. My kids love it. And actually it has Nick Nolte in it too, I think, right? I think that's right. Yeah, man, even on with an 11-day-old child at home, I remember that. That's pretty good. I'll pat myself on the back later. All right, let's jump across to the Aussies. All right, so let's bring up our time frame, bring it over to the 30-minute. And again, the reason why we bring it up, why we use 15-minute, again, I got asked this question. I meant to say it. Because we're talking about such short durations, the opening time frame, most futures traders are done by 10:30. We're looking at a very, very small time frame. That's why we're really focusing on the 15 minutes. Because currencies are more kind of free floating, it's more of an all-day thing, truly an all-day thing. I love future shares. You could trade those 24 hours a day. Yeah, but the volume is just absolute nothing, right? Most of the day, all of it's kind of situated within a short period of time. Currency volume is spread out a lot more because it's, it is truly traded 24 hours a day. We look at the 30-minute. We look at the larger time frame so we can see some more data. So right now, the Aussie, you can see, has had a pretty big run up from last night. And I mentioned yesterday, today, if you look back into what we had yesterday, where is it? yesterday, this monetary policy meeting note, you can see that this is really the trigger, right? Late last night, right in this time frame, that was the trigger based off of what they said. We've been looking for a reversal area. Now, this one is kind of those ones. There's nothing really. I mean, we're kind of up in like almost like a no man's land. I like this one. I do think it is due to retrace. So I've been kind of waiting for kind of a candle formation that I like. I don't really have it. I mean, I could go up and look for like a true reversal level, and you can see that there's been some sellers sitting in kind of in this level. If I wanted to draw the zone with it though on a 4-hour basis, I could say that really, I mean, it's okay. I mean, there's some sellers sitting up in this area here, right? And do I love them? Not really, but I mean, you could draw it there. I mean, it's a decent top, and there was a little bit of a test there. So I mean, we're getting pretty close, right? We're getting pretty close for reversal. So I'm really kind of looking for this one. And again, this one is one of my favorites to trade at night. I'm looking for it to kind of reverse back down again. It's been such a day of Australian strength / dollar weakness. I mean, the Dixie is still down just a little bit at 0.19. I want to see a good top and look for a little bit of a roll in this one to come back down. But I think we'll be able to get back down to the 74, 74.10, 74 range back down to here. Unfortunately, this is another one of those scenarios. We had buys at 73, 76. It got close, right? We missed it by 2.6 pips, right? 2.6 pips. It's kind of laughable, right? This one has a 2-pip spread, so I basically missed it by the spread. It happens. No harm, no foul. Oh well. But again, there's 2 little levels up top that we're watching out for, looking for a reversal in this one. One way you can play this too, if you're looking for that reversal, is really try to play this zone here and look for a break out the bottom side. Be cautious though. There is kind of a level just a little bit below. Not as worried about this, but with a break of 74.51, especially if we can time it with a session, you can look for it to roll, right? You can look for it to roll. Okay. Let's go down to Aussie Yen. Now, Aussie Yen is very, very similar. Now, yesterday, we mentioned a little position here. It hit it and dropped down pretty decently. But again, this basing here didn't really help us. It came down and found that base and then kind of came up. And once you had this here, time to get out and time to get back in. And again, we got the Harry Potter signal, but it didn't come back and give us an entry, unfortunately, and went higher. And kind of the same thing. Good Australian news. Look for it to punch. Looking for it to roll. Don't have a candle. Looking really for a decent level top on there. Checking this one at about every, I don't know. I'm looking at both of these. I mean, I probably peek it at once an hour just to kind of see. It's like, do I have the formation I'm looking for? Not yet. No. Okay. And it'll take. I mean, I probably don't have to look at it that frequently. It'll take about an hour and a half, 2 hours to give us the full formation. So it's not one of those things like, oh, is it here yet? Is it there? Like I'm not watching a watch. I'm not waiting for a pot of water to boil here. I'm just waiting for the correct formation, but it'll take a few hours. So you'll be able to see it. Most likely it'll be something in tonight. Once all the, once the US and the yen are taken out of the equation, it's probably where you'll see the rollover. All right. Now, euro pound. So had you been watching this morning, we talked about how this one had a great little fib retracement off of the 61.8 yesterday. And again, I occasionally draw this. There was a zone sitting there, so we knew we had a zone. And again, refining it down a little bit further, you can see that it took some time, right? It went from the 61 to the 50, back up to the 51, back up to the 50 again, back to the 61 again, and then finally collapsed all the way back down. Not only did it break the 23.6, it came all the way down. We had mentioned earlier, and again, we were sitting right here. We had just touched this zone when we were talking earlier today. Here, I'll put, let's see, right there's the 8:30 window. It was sitting right there when we were talking, okay? And we mentioned we had an area of buyers down here. We had retraced fully back down again, and all it did was do a 1 to 3 and then kind of came. It actually went back up to the zone a little bit higher and then rolled back down again and hit it again. It is now moving higher. So we talked about it retracing, the profit taking from all the strength that the pound had. Well, there was your short duration trade. This one lasted, let's see, there's your 8, there's your 9, and your 11 was back over here. So this one moved in total only about 17 pips. And again, this one has had such a small ATR. Its ATR is very, very tiny right now. On a daily basis, this one is down to 40 pips. 40 pips. So very, 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 very small, right? And again, you got to be careful with those kinds of things. But again, nice little setup. At this point, Probably not using fibs much more on this one. Like I said, we've kind of bounced around. If anything, the one thing I'm looking at is here. Excuse me. There. You guys can see and this one really pushed it. I thought that one was going to break. And there, you can see we have 5 touches at this level. At this point, I'm probably looking for more of a, once I get the actual risk level itself, probably in there, but I may move that a little bit. Something along those lines. I think it's due probably to continue lower. Like I said, I like the pound right now more than I like the euro. I think there's more strength coming in that one. So what this one would look like would be a break of approximately 84.22 to the downside with profit targets most likely heading lower. And again, could it hit and bounce again and then hit it and bounce again? Yeah, I could do it like another 10 times. I don't care. I mean, I'm in if this, then that trader. It's got a break, and you guys know the Harry Potter formation. A break, a base, a pullback, and that's where our entry is based off our established level of risk. Right now, I have to use this level, but wherever it comes down, the top and bottom of the candles in that sideways movement is where we'd be looking to take this one short. All right. So not quite set up yet. But again, we talked about a bounce this morning with profit taking from the European session, which started here down to the US session. What did the US session do? Provide the pushback again. And now it's starting to drive forward again. Impulse, correction, impulse, correction. And we'll see if we'll get another impulsive move down that helps us on this Harry Potter South. Euro yen. All right. So euro yen. So another one, I don't have to draw the X's on this one. You can see we touched it, we touched it, we touched it. Again, there's 3 touches right here. You expected to fail. It did. It came through and it ended up punching through the bottom side of this one. We did have a higher zone here, so we really weren't looking for a Harry Potter trade. You can see the two lines in here. Hopefully you guys can see them. Here, I'll make them solid for you guys. Solid and solid. These are upper time frame. I think they're 4-hour or daily zones. So this is not really a Harry Potter that we are looking to take to the top side, because again, putting a long into an area of sellers is not the brightest thing in the world to do, right? I mean, think about it. Hey, there's a whole lot of sellers right there. Can I buy into them? No, it's not a good idea, and that's exactly what this was. This was another thing that comes up for mentoring a lot. I've been asking people about what time frame they're doing a majority of their analysis on, and are they using multiple time frame analysis? And you'd be surprised how many people say no. They're looking at one chart. They're totally focused in. They're like a horse with blinders, and unfortunately, that's the wrong thing to do. You guys know all the right terms and write all the right slogans, but you're not applying them in the right ways. And this is one of those things where, if you look at this on a larger time frame, you could say, hey, listen, we should be looking to, get ready to short this thing, not go long. Yes, this is the Harry Potter. This is a typical long pattern, but you're not going long into a higher time frame areas of sellers. So as you can see, it pierced that band at 113.18 and pushed back down again. And now it's coming down and playing with the buyers that helped stabilize and punch through this level originally over here before we hit it like 4 times. I would say, keep that on your radar. There's another potential short in there at 133.18. I think it's a decent level. Again, it's a large time frame. Even on the larger time frame, this took off, and again on a 4-hour, that's 1, 2, 3, 4. That's going to be a solid red bar to the downside, so it's going to look pretty good. So keep it on your radar. Again, I would say, at this point, if you really wanted to mark it off, you could mark off tomorrow morning's. Let's see, tomorrow morning's European Open, which is right here. If we're able to kind of rally back up to it, that could be another potential short for the European session open. Okay. Euro dollar, nothing but reversed. So here's our old fibs. And again, we were looking for some of the pullbacks in there. When we drew our fibs, you guys can see that it came back and literally grabbed this 50%. For those of you that are new to fibs, fibs can be very, very confusing. The way people draw them are different. Everybody's got their secret sauce, their flavor, their additives that they're doing to it. At its most basic form, the 50% is the easiest one for people to draw to see. The 6180 sitting right there for stop losses with a 23.6 on the other side. This one just happened to coincide with a demand area that I love, and it did. It came down and it didn't hit the 50. Well, it broke through the 50. It hit my supply zone and then took off, right? So we left it there. And again, top side, we weren't really looking for necessarily additional shorts after it came down. But again, the original zone was formed here. Here's number 1. Here's number 2. Here's number 3. What do we expect number 4 to do? Blew right through the top. Now, unfortunately, it didn't give us a Harry Potter. It did give us the base. It just didn't give us the pullback and then came up. Now, I do like this for tomorrow. I do like that zone. I like that formation. I like the way that green candle formed. I like the way that red candle formed. This is something that I'm going to have on my radar, particularly from the open tomorrow morning. And if we can rally back up to that level. So I'll change this to here and put it here, 116.62. I like it because of the way that it formed. Now, ideally, if this would have based and pulled back a little bit and tested it, I would have liked it a little bit even more, but I still like the way the candles formed up there. The percentages of wicks and bodies and everything, I really like those. So it's an area that I'm marking off. And again, I don't really need fibs anymore because again, that's complete. I can take it off. I'll leave that one there because it had a good kind of bounce off of it. I don't need this area anymore. Again, it served its purpose with our 3 hits. The original zone was back here anyway. I would say right now, probably top and bottom wise, I'd be using these 2 levels. There is going to be some buying here around 116.10, probably to 116 flat, which is in here. Probably going to be some buying in there. And again, could that be a European bounce tomorrow? Sure. I mean, these are the type of levels you tend to see it. I mean, this was late last night. Like 6 o'clock yesterday, you don't expect this one to move at like 5, 6 o'clock in the afternoon. And then again, European session late at night, it kind of took off. So, it's an area, it's a potential, but the areas I like are 116.62, 115.72. And again, I'll put a little warning here that change that one to yellow so you guys can see it. The 116.09, 116.10 range, probably an area where there's a little bit of a, maybe a bounce opportunity. All right, a little bit of European news. Give us a little bounce in the overnight when there's no U.S. traders in there. Pound yen. So, pound yen. Talked about this with Todd earlier, right? Right here at that 8:30 window. We had just come off 58. We said that 58 has not been hit since June 16th, June 20th, 2016. On a 30-minute, you guys all know what this pattern is called. Again, we had a level of basing here. And again, same pattern. A chart is a chart is a chart. This is on a 30-minute. You can see level of basing had a little pop out of it. Came over, and again, European session open. Off to the races, straight up, parabolic move, looking for a retracement back again. Expected profit taking to come in. We mentioned that it did. This pulled back approximately 40 pips. So decent pullback thus far. I would expect it if it can break through this level of buyers here with this wick over wick. I would expect this one to continue to go lower and come back to the origin of the move, which is down here at 156.97. 158 is kind of high. Not that I don't think it's not justified to be up there, but a lot of the run up of this one was again because of, basically, the Bank of England saying that, yeah, we're raising interest rates. We're going to do it this. We're going to progress of this nature. Our goal is to avoid inflation. I mean, they kind of like ironed it all out for us. So, yeah, it's kind of there. And again, now it's just the profit taking and kind of bringing things back to reality because, saying you're going to do it and doing it is 2 different things. Okay. So again, bearish on this position. Again, still a Harry Potter for later in the week. I don't know what's going to get here, but 156.51, 156.13. Is basically when we break through, look for a bit of a pullback, look for this one to continue. Love the racetrack over here. Looking for it to kind of do the same thing it's doing here, but just at a lower pace. We'll see. Maybe it's this week. Maybe it's not. Maybe it's next week. But again, this is how you build a watch list of things that you're looking for when price gets close. If you want to get really cool with it, again, you can set yourself a little bit of an alert, something like this. Give yourself a dashed line or dotted line. And again, you could turn it into an actual alert if you really wanted to. There we go. Okay. Again, depending on your thing. But see, I can add an alert, right? Yeah, I'd say look negative. Pound dollar, same thing. Now, this one went a little bit higher. We were sitting actually right here when I talked with Todd. We had an area we were looking at 138.05. It ended up punching through that at 5:30 in the morning before kind of forming the top and the pullback. It's the same thinking. Unfortunately, I don't really have much in here until we really get down to the 137 level. We're looking for a short, but like I said, this is one of those things where Nadex is great when things kind of, burst through a level. Traditional trading, you got stopped out, right? Had you gotten short here with Nadex, guess what? You're a little positive in the trade now. If you use it out of the money, you're going to probably win this one. Probably not. But again, that's trading. You got to take risk in every trade. So we're looking for a reversal. It just needed to go a little bit higher. But it is a decent top. I don't mind this, right? Whoops. It's decent. It's decent. I mean, it did it in kind of the lull in the market. It's an area we can watch out for, right? I should leave this one on. Actually, we should shrink it to there. And again, you can see that kind of little Harry Potter formation. We'll see. Again, we talked about the dollar reversing in the U.S. session. Pound drove, UK traders sent the dollar down. UK traders sent it right back up again, and that's what we're seeing. This one it did it a little bit early, is all. And again, now there's your base, your pullback, your drop. But I think overall, look for this one to continue lower as well. Okay. Dollar CAD. Dollar CAD has been choppy. Another front run position. Again, you guys can see it down here, the 123.08. You can see how close, right? It's a level we've had on for a long time, so you guys should all have it at this point. You guys can see that we were talking about a level of basing, front run, based on the top, based again. Didn't expect this one to hold. We really weren't doing much with it. That's why it's just in yellow, but we'll move it to kind of remove any confusion. Really, this one's kind of in a holding pattern. I mean, yeah, the buy's already come off. It's too late to get into the trade now. I think later on, I think tomorrow should give us some good opportunity because we don't really have any US. Let me see. Do we have a US? No. It's just the CAD at 8:30. So this would be one. I'd be using the same opening strategy. This is a level we could take a long from. I would say news-wise, probably like this. Here is probably my top and bottom for kind of, if I had to say right now what my top and bottom for kind of pre-news would be there, 124.23, 123.07. They're okay, but it's kind of sitting in the middle. It's not really trending in the U.S. market. It's not really giving us a whole lot of telltale signs of really what it wants to do right now. So, maybe in the overnight we move to a better place. Just not there right now. So it is what it is. We can only do so much. Dollar Swiss. So dollar Swiss is just kind of going back and forth. We talked about a level here. Was it strong? No. Bump, went through. We could have removed it. That was actually an older level from last week. We had a level here at 91, 98. And again, we hit it here, bounced, hit it and bounced, and then kind of used it again to kind of go higher. Is this one really trending? Not really. We kind of had a channel, and it kind of bounces out of the channel and sucks back in, and you can see it pretty clearly, right? If we're talking about the channel that exists right here, yeah, it bounced down and grabbed it and pulled back and then stayed in there again. It bounced down and then came right and sucked back in the channel. So I like the extremes of this one. The extremes right now are going to be here. So it's another one of those things that it's one of those positions that it's kind of right in the middle. It's like, it's all right. I mean, the areas are working, but is it the best? 2 pips in 24 hours, right? Shot down, came right back up, 2 pips. So, and even the swing, we're talking about a 35 pip swing on it if you caught the very, very bottom. So I think there's better opportunity. If you want to wait for it to get back up to 93, I think we're good. If not, wait for 91.40 on the downside, get something a little bit better. But again, you want to take the opportunities. So this is a box I drew yesterday. We talked about how it was really just channeling back and forth again. Has not left the channel in 24 hours. It's in the same exact channel. This one has moved 4 pips in 24 hours. It is high in the curve. I am more bearish this one, but I don't really have a great entry. It's not anything that I'm really in love with right now. The daily ATR on this one has been shrinking as well. The daily ATR is 60, so it's not quite as bad as the euro pound, but it's also not huge. And again, we're talking about a channel top to bottom that's about 50. So it's literally just, it goes up, comes down, goes up and goes down, but it's very fast. Down, back up, does nothing. Down, it's like, yes, it's moving, comes right back up again. It went down, and this one took half a day, but then we're right back at the same spot of equilibrium again. So again, is there better opportunity? Yes. Take the better opportunity, right? That's all I can say. Look at this, Bitcoin back down to 62. Oil. So oil, look at this. We were here. This is kind of a funny one, right? We open the session here, we close the session right at basically at the same point, right? And again, it was kind of doing that little where it goes up and then in the US session it went down again, but it did it so fast and it kind of split sessions, it went all the way back up again. So instead of doing the standard in and out, actually this one should be there. This one did the exact opposite. It went up very, very quick, shot all the way down, and then we hit 10, really the 10 o'clock time frame, and we reversed all the way back up, and we're kind of where the peak was. So I would say for oil, there's been so much talk about oil. Oil demand. Japan has said it. Russia has already said, "Oh, don't worry, we'll stabilize the market." We'll save you guys. We got you. Which they're part of the cause right now because of OPEC plus. Way to play this one is be the same way we play the opens. There is an oil strategy I give you guys using the 30, the 5, and the 1 minute. You can look on YouTube on Nadex's webpage, trading gold and oil and natural gas around economic events. It'll give you the full strategy. Right now, I would say there's not much more we can do with it for today. This market closes in an hour and a half. It'll probably start mellowing out. You can see once it hits this 14, it really kind of just slows down. So wouldn't say there's many trades we can take today, but the funny thing is we're at the exact same point right now at 53.60 that we started the market at yesterday. So we drove down, US market ended. We drove all the way back up for the UK session. Today they drove it down and then drove it back up, just did the same exact thing. We're exactly where we were yesterday at 9 a.m. So yeah, oil inventory report tomorrow. Remember, 5:30 and 1 is what you're looking for that. Now, gold is actually in the green, right? It's in the green, but you're like, wait, what? It's because it was over here yesterday. It started there. So gold, you can see again, we had that parabolic move up, and then again, we bounced off 1800. Huge psychological number for gold. Dropped down. We came down here. We talked about this level. It's an ugly level, but nonetheless, it was a takeoff point, so you have to mark it off. You can see we hit it and then hit it again and again in the overnight. This European market started right here, right there. Really didn't know what to do with it, and it's been going down. So even though it's green, kind of like, it's pushing to the downside. So this is since yesterday. I would say for gold right now, I'd really like to see, we really need some US-based CPI numbers. Maybe we get some movement tomorrow. Again, we have, let me get these off real quick. We have German and CAD CPI data tomorrow. So maybe tomorrow morning gives us a nice little rally in gold. I mean, remember, gold is used by the whole rest of the world. It's not just a US-based currency or US-based kind of replacement for wealth. The CPI should help a bit, but right now I would say that, again, all we did with this big punch here with non-farm is now all being erased and we're back. And you can see it, all this basing, just sideways movement here. So even gold is really not in a great spot. It's okay. Could we take it long from this level here at 1760 again? You could, but I mean, look, it drove all in here. It was a takeoff point. It got hit again. There's buyers in there. And again, maybe time it with a European Open. But would I take this at like 2, 3 o'clock in the afternoon? Probably not. I would time it with a session open. And again, basing here, top, basing, top. It's okay. I'm just not super thrilled with gold right now. So, but I do think, again, once everybody starts talking about raising because of inflation, I think this one finally takes off. Just nobody's there yet. It's still too early. So we're stuck. And then silver. If you attended this morning, we talked about silver. Remember, I keep joking that, what was it, Wall Street bets or whatever? It's supposed to be at $100 by the end of the year. Okay, we are at 23.86. It was at 24 this morning before pulling back. I mentioned it was a psychological number. Roll of the session, we expected it to go down. Again, here was the European move up, but it really been moving since yesterday. It expected the roll. Do I think it's going to get to 100? No. Does it deserve to be probably higher than it is? Not quite yet. Not quite yet, but it'll pop too. I mean, it'll be a proxy for gold when gold pops. So, what do we do with it now? I mean, the top of this, again, $24 it's a double zero top. This is okay. I mean, I like how the wicks are lower there. So I would say, do we do one more short out of it? Maybe, but I do think it does. I think it is justified to be a little bit higher than where we are. I don't think it's overly beat up, but until they really start acknowledging inflation, nothing's gonna. Excuse me again. Nothing's really gonna stop this one, unfortunately. So we'll see. Right now, again, I would look for this when its session opens. Again, most of the movement happened already. If I had to pick a direction right now, I'd say probably a bit more bearish, but again, there is a little bit of buyers helping stabilize this one. But watch the 24 number. The 24 to 24.10 is going to be an area where we're looking for. And again, you can see it came up and hit it. like I said, right now this market closes in 30 minutes. I don't think it's going to do a whole lot. I think it's going to start flatlining. So there's not much we can do with it today. Okay. And then last but not least, let's go over to natural gas. You can see natural gas ended up pushing down. We talked about it in the overnight. It's pulled back a little bit. There are some buyers sitting here. This one needs to continue to fall. Like I said, need to get some more propane, but it's on its way down. I don't really have buyers in this one until we come back down here much lower. I knew I had a thing somewhere. I guess I pulled them off by mistake. I have buyers at $4.62 to $4.59. So really, until we get back down, we don't really have much. Although watch for this. Watch for the buyers right here. It's an okay candle. I'd have preferred if the red was the low, not the green. Let me check that out real quick, and then we will finish up. I'm not concerned about that. It's an old area of interest there. We do have a little level of this hit number 3. That would be a profit target for shorts. There we go. So if you were getting short off these levels, right? And again, there's a level right here, the drop, a base, a nice push out, kind of front run. That's what we hit and grabbed. I would say make sure if you are short, make sure you're starting to capture, or at least learn how, at least protect your profit at 476. There are some buyers there in the past. It is a third hit, so it is not the strongest level, but it's still a level nonetheless that you need to watch out for. Okay. TLT being down, not surprising. Stock market up, bonds down. Bitcoin is up about 2. It looks like they're up around that 63 mark. Again, all morning it was like, oh, they're approaching the 65 mark because of that ETF coming out. Again, kind of the same thing. That ETF is great, but imagine what's going to happen in the ETF if, U.S. decides to do the same thing China does and say, yep, it's environmentally extremely unfriendly. It's outlawed from mining it or using it for transactions in the United States. Losing Canada and the United States hurts us a lot. But hey, it'll be optionable, right? If it's an ETF form. Anyway, that's it as far as the analysis goes today, as far as charts go. Let's bring us back across and click one more chart. Make sure you guys mark off your calendars for next week, October 26th. It's the last week of October. Same time, 12 p.m. Eastern Standard Time. And again, if you guys are around in the morning, do catch us on YouTube. Again, it's not hyping my channel. If you guys want, I broadcast live there. I don't really do much else with it. But Nadex every morning, we track these 8:45 to 9 a.m. Go to YouTube, click Nadex. Click the subscribe button and then click the bell icon to get notifications when we go live, and you guys will be able to see it every morning. We break down, it's called Morning Market Movers. Todd and I have a really fun time with it. So with that said, if you guys have any questions, you guys are more than welcome to shoot me an email, support@keeptradingsimple.com, website keeptradingsimple.com. And with that said, thank you for joining us today, and I'll catch you guys tomorrow. Take care.